The quiet walk out of the dollar is going to become a stampede. It's going to expose the Fed as the paper tiger that it is, and the world's going to see that inflation is not going to go away. They're going to make the mistake now of cutting rates, and it's going to really let inflation run wild. And the Fed is going to lose what's left of its credibility. And then that's going to be the final nail in the coffin of the dollar. I mean, the dollar is going to collapse. Gold's going to go through the roof. And I think, we're going to finish the de-dollarization process. I think gold is going to reclaim its throne as the primary monetary reserve for global central banks. We made a deal with the devil, and the devil hasn't come back to collect yet, but he's coming. It's not a question of will or even if we're going to return to a gold standard. The question is when. Harris is going to try to blame all the problems that government created on capitalism and use that as an excuse, to implement socialist policies. We got just a taste of that with the price control stuff.
But this line that you said within one Harris administration, ultimately very difficult to see the dollar surviving as the global reserve currency through a single term of the Kamala administration. Are you trying to tell me that 2028 the dollar is what?
On the Spot with Michelle Makori is brought to you by Goldback Inflation-resistant 24-karat gold currency.
Hello, I'm Michelle Makori. Thank you again for joining us. My next guest was one of the few that correctly called the 2008 financial crisis. And he's been warning for a while that we're on the brink of a crisis far worse than that one. He now says that the Fed is effectively surrendering its fight against inflation and sacrificing the dollar, that the dollar's days are numbered as the global reserve currency, and that process can be vastly accelerated depending on who wins the next election. Last fall, he cautioned that we were getting a distorted picture of the US economy and that the rosy economic data reported would get a major downward revision, especially when it comes to the labor market. And he was spot on that one, as we recently had a significant revision to last year's payroll figures, with the Bureau of Labor Statistics revising down the total number of jobs created over the 12 months ending in March by a staggering 818,000, the largest downward adjustment since 2009. Well, here to help us cut through the noise, give us a clearer picture of the US economy and how he thinks we should best be navigating the upcoming Fed rate-cutting cycle and the markets, is Peter Schiff. Peter is the chairman of SchiffGold, the founder and chief market strategist of Euro-Pacific Asset Management, and the author of 3 New York Times best-selling books, including The Real Crash, America's Coming Bankruptcy, How to Save Yourself and Your Country. And Peter is also, of course, a fan favorite here on Kitco. Really nice to have you back with us, Peter. Welcome back.
Well, nice to be back, Michelle.
All right, Peter, let's pick up where we left off last time. And last time I had the pleasure of chatting with you was in person in November of 2023. And you said then that things were starting to feel a lot like they did back in 2007 before the financial crisis, which you were one of the few to correctly predict. And you said that one of the first signs back then were data revisions and that you were expecting data revisions going into 2024, heralding a new crisis. Let's watch what you said back then.
In the fourth quarter of 2007, that's when the Great Recession began. But during the fourth quarter of 2007, we were reporting rosy economic numbers, just like we are reporting now. It wasn't until the fourth quarter of 2008, a year later, that they went back and they revised down an entire year's worth of economic data. Right. And all of a sudden, those rosy statistics became the Great Recession. And I have a feeling that a year from now, we're going to find out that the economy wasn't nearly as good, in particular the labor markets, as we were being told.
So we're not at the crisis point yet, but we did get lots of data points revised, particularly on the labor market front. So what's your analysis of where we are right now? What's your macro read at the moment?
Well, first of all, I think that there's more downward revisions to come. In fact, I think the 18,000 jobs that just disappeared, that's just the tip of the iceberg. I think more jobs are going to vanish probably after the election rather than before. I guess there's no real reason for them to come clean now when they're trying to, put a lipstick on this pig of an economy. But, the labor market was never really strong. The jobs that are being created, I think the largest segment was government jobs. And these are not the jobs the economy needs. These are non-productive jobs. In fact, they tend to make productive people less productive. So they have to be supported by the taxpayer or, inflation. We have to run larger deficits. The Fed has to print money to pay their salaries. And then they spend that money to buy goods and services they didn't help produce, and it drives up prices. A lot of the jobs have been part-time jobs. In fact, net, all the jobs, the new jobs are part-time jobs. And they mostly went to people who already have jobs. So why are people taking on second jobs and third jobs? Moonlighting is at an all-time record high. It's because inflation has so decimated the value of their paycheck that they need a second one or a third one to pay the rent or to put food on the table. So these are jobs that people wish they didn't have to work. But unfortunately, in this weak economy, they do. And I think the unemployment rate, the official unemployment rate, is only low because of all the people that we don't count anymore. If we still measured unemployment the way we did before 1994, we would find that we have a historically high unemployment rate. So the labor market is weak, and we're going to see that, maybe on Friday. We'll see if we get the non-farm payroll report. But whatever it is, take it with a grain of salt because it's going to be revised lower at some point, just like we got the numbers on the JOLTS and the numbers that we got today. It was the lowest, I think, in 3 or 4 years for that number. It was way below estimates. And of course, they went back and they downwardly revised the number from the prior month. And that's par for the course. The government comes out with a number. Everybody focuses on that number. And then a month later, they revise it down. And then nobody pays attention to the fact that what they thought was good news ended up really being bad news. And now they give you another number that everybody focuses on, which again gets downwardly revised the following month.
Well, we did have some upward revisions as well in the data, at least on the GDP front. The U.S. economy grew at a faster pace than originally estimated in the second quarter, according to the Commerce Department's Bureau of Economic Analysis. GDP increased at an annualized rate of 3% in the second quarter, an upward revision from the 2.8% initially reported. For comparison, according to the government data, the first quarter growth was 1.4%.
Yeah, we'll see. We'll see, Michelle, what happens to those numbers maybe next year to see if they hold up. But I don't believe that the economy is really growing. I think there's inflation. And so inflation can distort these numbers, especially when it's underreported. But, look at the trade deficit that we got last week, the merchandise trade deficit. It was the worst trade deficit we've had in 1 month if you exclude the 4 months in early 2022, January through April, which were, the reopening of the economy after the pandemic. There was a bottleneck of goods that hadn't been shipped. And so as soon as we reopened, all this backlog got shipped. And so it really distorted the trade deficits. But the one that we just had is the biggest since April of 2022. And, it's going higher. So we've got these record trade deficits. That is not a sign of a strong economy. Strong economy produces more stuff. When you produce more stuff, you don't need to import as much. In fact, you can export more. But the American economy is hemorrhaging red ink. And it's not just the trade deficits, it's the budget deficits that are, record highs outside of the COVID pandemic months. Why is that? If the economy is strong, why does the government not collect enough, taxes to have a lower deficit? The fact is the deficits are high because the economy is weak. So the numbers, those numbers are not telling the real story.
Right. And, people have long been feeling a disconnect between the data the markets and their real sentiment on the economy based on their experiences. And, we take this data with a very big grain of salt. And I remember one of the first lines you ever told me when I first interviewed you, Peter, was trusting the government to report on inflation and economic data is like asking the mafia to give you the crime statistics and the crime reports and data. I've always loved that line because it really crystallizes the intentions there. But nonetheless, Peter, this is the data that the Fed uses to make its calls, or so we're led to believe. So what do you expect from the Fed then?
Yeah, well, first of all, it shows you how ridiculous the Fed is because it claims it's data dependent, but the data that it depends on is irrelevant because it's false and often gets revised. So they really should be looking at market data. I think the most significant data point is the price of gold, which is around $2,500 an ounce as we speak. And it recently hit an all-time record high of, I think it was about 2,530, but 2,500 was a record high. Alan Greenspan, who used to be the Fed chairman, when he was asked about the role that gold plays and whether or not we should, return to a gold standard, which of course he believes we should, but at the time, what he said was that, well, we don't really need a gold standard because we're effectively on one now, because he said that gold was an important way that he knows if his monetary policy is too loose or too tight. He said he looks at the price of gold, which at the time was around $350 an ounce back then. And he said, if gold goes towards 400, I know that I'm too easy. And if it goes down to 300, then I know that I'm too tight. And so I use the market signal of the gold price to know what I need to do with monetary policy and interest rates. Well, if gold is the most important signal of monetary policy, and it's at an all-time record high of 2,500, what should that be telling the current Fed Chair Powell? Its monetary policy is too loose. And he keeps claiming that it's tight. It's not tight. If it was tight, gold would not be making record highs. I mean, Greenspan was Fed chairman, so, why is he wrong and Powell right? He said gold was a key indicator of whether you have the right policy. We clearly have the wrong policy. Powell is getting ready to cut rates when he should be raising rates. In fact, they stopped raising rates too soon. Rates should have gone a lot higher, but they didn't. And now they're about to go down. And that's why gold's at a record high and going much higher. In fact, a leading indicator of the US dollar is the Swiss franc. The dollar is at a 13-year low against the Swiss franc. We're only about 7% above an all-time record low against the Swiss franc. And the Fed hasn't even cut rates yet. And they haven't even returned to QE, which is going to be the next step. In fact, they've already tapered the QE program. They're not doing as much, QT. They're not doing as much quantitative tightening as they used to. And soon they're going to go back to quantitative easing. That's going to be, I think, shortly after they start cutting rates. Because I think what's going to happen when they cut rates is maybe after a knee-jerk reaction, if we even get that, I think you're going to see long-term interest rates move up. And that's going to be very problematic for the economy, for the Fed. And so I think the Fed is then going to have to intervene in the Treasury markets by buying more bonds in order to suppress those long-term rates. And that's going to necessitate a return to quantitative easing, which, of course, throws gasoline on the inflation fire that the Fed never put out, right? It's still there. It's still burning hot, yet they're going to cut rates anyway.
All right, a lot to dissect there. I do want to start off with pointing out that, yes, Greenspan did say that gold was a barometer on how the economy is doing and on the dollar. And because he made that point, there has been, some thesis or conspiracy theory, if you will, that because it does indicate potential problems in the U.S. economy, that's why the price of gold may be manipulated by the government. Before we unpack what you're saying about where we are right now, what do you say to that? Because that has been a thesis that, yes, the gold is the canary in the coal mine. It sure tells you if the policy restrictions are too loose or too tight, but it also gives you an indication of how the dollar is doing, and it's not looking very good. So what do you make of the idea that perhaps that's one of the reasons why there's a vested interest in keeping the gold price artificially suppressed?
Well, first of all, they haven't succeeded in suppressing the price. It's 2,500. In fact, when this century began in 2001, gold was still under $300. And the Dow was about 10,000. And during that period of time, the Dow is up just over 4 times, and the price of gold is up just over 8 times. So if they're trying to suppress it, they're not succeeding. Now, it's possible that without some efforts to suppress the gold price, it would be even higher.
Right. Yeah.
But I think it's going higher than 2,500, regardless of any efforts to suppress it. I certainly, Wall Street, doesn't understand gold. Big investors are way underinvested, so you haven't seen that. In fact, I put up a graph. I posted it on X, I think it was yesterday, where I showed this massive divergence that just barely turned, which started in kind of late 2022 and accelerated in late 2023, where you saw huge outflows coming from the gold ETFs and a big increase in the gold price. Now, prior to 2022, there was a very strong positive correlation between the AUM of the gold ETFs and the price of gold. Right? As the price of gold went up, more people put money into the gold ETFs. But that changed, where you saw the gold price going way up. At the same time, people were pulling their money out of the gold ETFs, the investing public. So it's been a great contrarian indicator, because gold has been going up, even though investors have been selling it, retail investors. And I thought an interesting angle, too, is you look at the launch of these Bitcoin ETFs that came out in January this year. Over the last 6 months, Bitcoin is down 8-10%, whereas gold's up 23%, despite massive inflows into the Bitcoin ETFs and massive outflows from the gold ETFs. In fact, all of the gains that Bitcoin has so far in 2024 were in the first 2 months of the year. And I think a lot of those gains are going to be eradicated in the last few months of this year. And a lot of people are going to be surprised, but gold is going to end up well outperforming Bitcoin during 2024. It's going to have a better year than Bitcoin, despite all the money going into the Bitcoin ETF. So people are backing the wrong horse. They were pulling money out of their gold ETFs to buy Bitcoin ETFs when they should have been doing the opposite of that. Not that there were any Bitcoin ETFs early in the year, but they should have been selling their fool's gold and buying the real thing.
Well, Peter, you and I agree on a lot of things. We do have a disagreement when it comes to Bitcoin and the potential there. But as I always tell my viewers, I don't think one should choose. I believe in owning both gold and Bitcoin. That's my personal perspective. But let's bring it back to the Fed and what you said, that ultimately, if the gold is an indicator, even if it's manipulated or not, even if they haven't been able to suppress it significantly, it's still gone up, perhaps not as much as it would. But if it is an indicator that the policy is not too tight, on the contrary, you think that the Fed cutting rates will be a very big mistake. So expand on that and what you expect to see at this upcoming meeting. Yeah,
well, first, the bigger mistake was cutting rates to zero in the first place. I mean, they never should have done that. And then they never should have done quantitative easing. As I said at the time, they were making a deal with the devil when they did that. And, the devil's going to come back to collect. I mean, it's just a question of time. But because they made that mistake, they created an economy that's completely dependent on all that cheap money, on 0% interest rates and QE. And once you create that dependency, you can't remove the drug that the economy is now dependent on and expect everything to be okay. It's not. You're going to have a massive crisis. Now, it's still better to do that. So the Fed should not cut rates. The Fed should raise rates, even though those rate hikes will produce a massive financial crisis and a huge recession and cause, a lot of seemingly bad things to have to happen. A lot of businesses will fail, banks will fail, people will lose money, government's going to have to slash spending, which is a good thing, but not if you're counting on that money as part of your income. And bondholders are going to have to be told the truth that they're not going to get their money back. So a lot of bad things are going to have to come out in the open if the Fed does the right thing and keeps raising rates, because rates are still too low. Monetary policy never got tight. Powell keeps saying, we've had this tight policy. No, we haven't. Rates got to 5.25. In what universe is that tight money? And you don't even have to just take my word for it. Look at the credit markets. While the Fed claimed to have tight policy, government debt surged to a record high, household debt record high, credit card debt record high, household savings record low. That is not what you're supposed to get when you have high interest rates. When you have tight monetary policy, borrowing and spending is supposed to come down and savings are supposed to go up. The fact that that didn't happen is proof that the Fed never raised interest rates high enough to do the job. And that's because it knew that it would cripple the economy. So it kind of played lip service with this pretend inflation fight. But even 5.25 was too much, because the reason the Fed stopped hiking rates wasn't because inflation, the battle was won, but because banks started to fail. Silicon Valley Bank, Signature Bank, these banks collapsed, and a lot more would have collapsed had the Fed kept hiking. So they stopped hiking. So they're going to make the mistake now of cutting rates. And the reason that's a mistake is that's just going to allow the underlying problems to get worse. And it's going to really let inflation run wild. And the Fed is going to lose what's left of its credibility. Because what is the Fed going to do in 2025, let's say, when it's already been cutting rates and the economy is now admittedly in a recession, but inflation is now back closer to 9% than the 3% where it is now. And it's clear that it's not going back down to 2. What is the Fed going to do then? Is it going to reverse and start hiking rates again, which will produce an even bigger crash than that had, it had not even stopped hiking in the first place? Because once it gets the market prepared for rate cuts and it has to pull the rug out from under it and surprise them with rate hikes instead, that's going to be even more traumatic for the markets than had the Fed never cut in the first place. But I think it's going to expose the Fed as the paper tiger that it is, and the world's going to see that inflation is not going to go away. Inflation is the lesser of the two evils from the Fed's perspective and from the government's perspective. And then that's going to be the final nail in the coffin of the dollar. I mean, the dollar is going to collapse. Gold's going to go through the roof. And I think, we're going to finish the de-dollarization process. I think gold is going to reclaim its throne as the primary monetary reserve for global central banks. And the central banks that have been buying gold these last few years are going to be looking pretty prescient, because they're going to have a highly appreciated reserve asset. And a lot of other central banks are going to be chasing much higher gold prices to try to replace what's left of their foreign exchange reserves, because the dollar, would have collapsed.
So, Peter, you're saying the Fed is going to use its arsenal to fight an economy too soon, and at the same time then create stagflation, higher inflation, and a slowing economy, and then have no arrows left in its quiver when it's really time to stimulate the economy, and then the whole process starts to unravel.
Well, the Fed can't stimulate the economy. It never could. It just stimulates inflation. I mean, that's always the Fed's cure. For every economic problem, their cure is to create inflation. And it's kind of like a magic wand that they can wave. But now that inflation is the problem, inflation can't solve that problem anymore. In fact, it never solved the problem. You just paper it over and you kick the can down the road. But we're in a situation where, either we have to come clean and default, or we just inflate everything away. And that is the politically expedient path to go down. And all the while, of course, the government will be blaming others, just like they're now, trying to vilify, the grocery stores for raising prices. You guys caused inflation because you at the supermarket
at like 2% margins, yeah.
But, if the government does the right thing, well, then, they can't point fingers anymore. So that's why they're going to create inflation. Because, again, the public doesn't even understand what inflation is. They still think inflation is rising prices. So they blame the people who raised the prices. If they understood that inflation was expanding the money supply, they would know exactly who to blame, because they know who expands the money supply. And the money supply is expanded to fund the deficits. The deficits are skyrocketing. The national debt is $35.3 trillion. Biden is going to break Trump's record for the most debt in a single term. Obama still has the most debt of a president, but he had 8 years. Trump and Biden only had 4 years. But whoever wins the next election, I think, whether it's Harris or Trump, either one is going to break the record just set by Biden. I mean, the deficits are going up. We're damned if we do, and we're damned if we don't. I mean, maybe Harris will be able to beat Obama's two-term record in a single term. I mean, Biden has given him a run for his money. He's not going to be that far off of outdoing 8 years of Obama with just 4 years of Biden. But now interest on the national debt is over $1 trillion a year. That's a big program that they can't cut unless they default. It's now bigger than the defense budget. We're spending more on interest on our debt than we are spending to defend the country, right, which is really the primary function of the federal government. That's why we have a federal government, for national defense. That's the sole purpose that they're supposed to serve. And now we have to spend more paying interest on money they borrowed to do things that they had no constitutional authority to spend money on. But within another year or two, interest on the national debt is going to be bigger than either Social Security or Medicare. And those expenses are rising too. They're just not rising as fast as interest. That's one of the main reasons that the Fed's about to cut, because they know that the government can't afford the interest rates where they are, because all this debt keeps maturing. And so in order to bail out the government, the Fed has to cut rates. But the thing is, they can't afford 4% either. I mean, 5.25 is worse, but even if they go down to 4, it's still too much. Because remember, a lot of this money was borrowed at 25 basis points. And the current debts are so big, we're running $3 to $4 trillion deficits every single year.
Well, so Peter, we're going to have the Fed effectively surrender against its fight with inflation. Inflation is going to continue to accelerate while the economy is going to slow down. But you mentioned, the outcome of the election, because yes, while ultimately spending is not going to be dramatically reduced under a Democratic or Republican administration, and you're not going to make $5.3 trillion of debt disappear regardless of who's in office, at least not with any effective way. You did say in a post on X that you thought that if Harris wins, that gold is going to go to 10,000. And you posted something off your platform, and in it you wrote, the op-ed writes that if Kamala is going to drive gold to 10,000, posted on Schiff Sovereign, why? You also said something about what it means for the dollar, that it puts the US dollar status as the global reserve currency at risk. And this is why it's ultimately very difficult to see the dollar surviving as the global reserve currency through a single term of a Kamala administration. That's a big statement there.
Yeah. I mean, I think Kamala is worse than Trump on so many levels. At least Trump likes capitalism. Kamala Harris is a socialist, a Marxist. I mean, she was raised by a Marxist professor. Donald Trump was raised by his businessman father. So at least he believes in these principles and might fight to try to preserve them. Whereas Kamala Harris is going to try to blame all the problems that government created on capitalism and use that as an excuse, to implement socialist policies. We got just a taste of that with the price control stuff. But I mean, there's a lot more that she's got up her sleeve that she doesn't want anybody to see. But you don't want Kamala Harris as president when it hits the fan, because the types of policies that are going to be pursued are going to be so bad. But also just from a civil liberties perspective, I mean, the direction that the Democrats are going through in not just on economic policy, but about stifling even your freedom of speech. I mean, basically, if they win, things will get really bad, and we won't even have a right to complain about it, right? That'll be disinformation, right? It's like a government, propaganda. They might as well have a propaganda department in the government. Like, call a spade and have a ministry of propaganda. But what they're doing and the wars, at least if we get a Trump administration, maybe that we can have an end to some wars. I mean, Trump is not a fan of war. He's definitely not an establishment guy, and that's what we need. I mean, the establishment is the problem, whether it's the Republican establishment or the Democratic establishment. We need to break free of that. But Trump still hasn't gotten his arms around the magnitude of the problem. He still thinks that he can solve it. In fact, he still thinks that when he was president, America was great, that he made it great. And no, he didn't. I mean, the deficits got bigger, including the trade deficits got bigger. He made that a cornerstone of his initial campaign, shrinking the trade deficit, and it went up. And of course, it went up even more under Biden, but he didn't turn the trend, and he didn't turn the trend on debt. Trump didn't shrink government. He did a good job with, deregulation. He didn't go far enough, but at least he went in that direction. But he left a lot on the table, but he didn't reduce government spending. In fact, he added the Space Force. I mean, we needed that like a hole in the head. We needed to get rid of agencies and departments. We need to do what Milei is doing in Argentina. That's what we need here in the United States. It's just that things haven't gotten bad enough for the public to, be willing to swallow that kind of medicine. I mean, the good news is it will get bad enough, right? If that's good news. So hopefully we'll do the right thing eventually. But if Harris is president, we got no chance of doing the right thing. Not with her and whoever controls her. Because, I mean, even if Harris wins, I mean, who knows who's pulling the strings? She'll obviously be a puppet.
Look, you make a lot of good points there, Peter. I'm going to push back on the Space Force thing because that is part of defense, and that is to protect the space assets, including the satellites, which is so integral to our functioning. And many have said that could be the frontier for the next war, that Russia or China could take out U.S. satellites that are integral to functioning and render the U.S. military deaf, dumb, and blind. But Peter, I get the point that it's more spending.
But can't the Air Force handle that? I mean, space is up in the air. I mean, I was against Homeland Security. I mean, we never should have created that. I mean, the Defense Department should have handled Homeland Security. In fact, that's what the Defense Department is supposed to be, Homeland Security. The problem is the Defense Department is all over the world defending other countries. That's why we need a whole separate branch to defend us. Well, look, let's use our armed forces to defend the homeland, and let's not even have a Department of Homeland Security. Look, we have to streamline government. Government is way too expensive. That's why we have all this inflation. And that's why the politicians have to come clean, because the public doesn't want inflation, but they want all this government. Well, that's the trade-off. If you don't want inflation, then we have to have less government, because inflation is the way we're paying for government. We're not paying for it all with taxes. We're paying for it with higher prices, because the government isn't taking our money and spending it. It's printing money and spending that. But when they do that, they take our purchasing power. So if you want to get rid of inflation, you got to get rid of a lot of government. And that includes a lot of agencies and departments. So we got to streamline all these departments. Like, look, the Department of Education and Energy, we didn't even have those until Jimmy Carter. So how did we make it to 1980 without an energy department or an education department? I mean, we had education, we had energy, we didn't have those departments that are wasting money. We got to get rid of them. The Department of Energy doesn't produce one barrel of oil. In fact, all they do is prevent us from producing oil. And the Department of Education, we have a much worse education system now, thanks to the Department of Education, than we had before it existed. So let's get rid of it, right? And there's a lot of agencies that we don't need at all. They're not even authorized by the Constitution. The word education isn't in the Constitution anywhere. There's nothing in there that says the government's supposed to get involved in education. So why are they doing it? Now, let's get rid of it. Ronald Reagan, when he campaigned the first time in 1980, part of his platform was to get rid of the Department of Energy and the Department of Education because Carter created them. But the problem was he couldn't even get rid of those back then. They had already gotten their own, bureaucracy that had built up that now protected those agencies, that we couldn't even get rid of them a few years after they were created. That's the problem. Once you create a government program, right. I forget who said it, but there's nothing as permanent as a temporary government program. And these things weren't even supposed to be temporary. They were supposed to be permanent. So it's even harder to get rid of them.
No, I get the point that there is way too much bureaucracy and too many departments overlapping, or that should be doing functions that they shouldn't be doing in the first place. But, on the issue of the Space Force, I think protecting satellites and assets up in space, whether it's the Space Force or the Air Force, I think that is indeed something that is worth spending dollars on. As you said, the government is supposed to protect and defend the country, but agree that there's way too much bureaucracy and way too much entitlement. But I want to bring it back
what they have to do, Michelle, is they've got to cut other spending.
Sure.
Look, I agree that the federal government should protect the country, but they also have to protect the country from inflation.
Absolutely.
and protect it from, destruction caused by its own agencies and departments. So we need to cut government spending in other areas so that we can afford to have the space stuff if we need it. But we can't just borrow the money to pay for it and claim that we need it, because the debt is also a threat to the country.
Sure.
And it's actually a greater threat than anything that's happening up in outer space is the threat that the government is creating right here on Earth, right, with all the money they're borrowing and spending.
No argument there, Peter. No argument there. But let's go back to how big of a threat we could be facing under a Harris administration. How do you get to $10,000 gold in 4 years?
Well, $10,000 gold is just a 4x gain, right, from here. So 4 times. And, gold from 2001 to 2011 went up more than that. So, I mean, but 4x in 4 years would be pretty big. But I think that there's a lot of pent up price appreciation, because from 2011 to basically 2023, the price of gold didn't really go anywhere. It got to 1,900 in 2011, and it got to about 2,000 in 2023. So in 14 years, the price of gold didn't go anywhere. It just went sideways. And that was kind of the environment that kind of gave rise to Bitcoin, because people were getting frustrated that gold wasn't going anywhere. And so they were buying Bitcoin, and Bitcoin was going up. But now gold has just started to rise again. We've taken out all that resistance. And so I think you're going to see a big leg up in the price of gold. That's going to kind of mirror the magnitude of that initial move from 300 to 1,900, which is a 6-fold increase. But I think you're going to see that increase in a shorter period of time than the 10 years that it took, for the other 6-fold increase. But it's going to be proportionate to that. And I think the catalyst is going to be the rate cuts, the resurgence of inflation at the same time that the economy is in recession. And that sidelines the Fed from even pretending it's going to fight inflation. And so without that pretense, the bottom gets, falls out of the dollar. And I think, the stampede or the quiet walk out of the dollar is going to become a stampede. We really accelerated the need to get out of the dollar with the sanctions on Russia. And, that was a big wake-up call to the rest of the world that, you better de-dollarize or you're next. Like what's happening to Russia and Putin can just as easily happen to you if you're dumb enough to keep U.S. dollars, right, as your reserve and U.S. treasuries. So, the world, got the message loud and clear, I'm getting out of this currency. And so that's already underway, but that is going to accelerate when there's an urgency to get out. because then they start to see the dollar falling. And then, you don't want to be the last one holding the bag with the dollar. You want to get out while you can. So I think you're going to see that big break in the dollar. Their all-time record low for the dollar index is about 70. And right now we're just above 100, 101. So, we have a ways to go to crack to all-time record lows. Again, I said we'll crack to an all-time low against the Swiss franc probably early next year. We'll be at a record low against the Swiss franc. But it may take a couple years for the dollar index itself to make a record low, which would, mean a big move up in the euro, the pound, the yen. As bad as those currencies are, and they got a lot of problems there too. we just got them in spades. But once the dollar really cracks through that support, it could just free fall. And that's going to be a big catalyst for gold.
Well, Peter, certainly weaponizing the US dollar to the extent that it has been and taking Russia off the SWIFT system that accelerate the de-dollarization process that we've been reporting on extensively here on Kitco and that we've seen accelerate, to your point. And then some would say that the withdrawal from Afghanistan and the debacle that was also signaled lack of faith in the US dollar, given it's backed by the credit and faith of the US government, and credit's not looking so good, and faith perhaps waning as well under the Biden administration, and what many have said is the weakness projected on the world stage there. But this line that you said within one Harris administration, ultimately very difficult to see the dollar surviving as the global reserve currency through a single term of the Kamala administration. Are you trying to tell me that, 2028, the dollar is what?
Well,
I don't disagree with the trend. I'm just trying to understand the timeline.
When this stuff happens, Michelle, it can happen very quickly. It's like the emperor has no clothes. The debt is going to increase exponentially while she's president. And so we'll be at 40 trillion. I mean, we could easily be at 50 trillion of total national debt during her first term. If we add, if we're doing 4 or 5 trillion of debt per year, I mean, who knows? But there are other things, other plans that she has that if they pass would really create a lot of problems for the U.S. economy. But what is going to happen is our creditors are going to come to the unmistakable conclusion that we can't pay our bills, that the numbers are just too big, that it is impossible for the U.S. government to honor its commitments. Everybody thinks, the U.S. government is never going to default. We need to default. Default is the best way out of this debt situation. But if we don't have the integrity to default, if the politicians can't do that, then they're going to inflate. And inflation is actually worse than default from the perspective of the creditors and everybody else who owns dollars. The people are going to lose more money to inflation than they would to default. Because if the U.S. government defaulted, they wouldn't have to completely default. We wouldn't have to tell people you get nothing. We could give them 30 cents on the dollar, something like that. I mean, we could reduce the debt to some manageable level. But inflation is going to wipe out even more than that. I mean, inflation could wipe out more than 90% of it, maybe 99. Who knows if we have hyperinflation? But I think that when our creditors come to that conclusion that they should have come to years ago, but they didn't. But when they come to that conclusion, nobody is going to want to hold U.S. treasuries or any bonds that are denominated in U.S. dollars because they know they're not going to get their purchasing power back. They know there's going to be a default through inflation. And so then it's impossible for the U.S. government to borrow money. It's impossible for almost anybody to borrow U.S. dollars. So how's the economy going to survive that? It's just going to implode. And there's just going to be massive inflation.
Are they going to come to that realization in as soon as 4 years? And I'll throw back... And I'll throw back the argument. Again, I'm not necessarily disagreeing that those policies are going to skyrocket the debt And a weak administration on the world stage is going to make people lose more faith in the US dollar, which is also partly backed by US military might. If you project weakness on the world stage, that's certainly not going to help. And
yeah, look, if we have a Harris presidency, and worse, if the Democrats regain the House and they keep the Senate, I still think that Trump is going to win. I still think that this spike in Harris's popularity was engineered by the media. I just never believed it. I didn't believe these polls. Because I don't think they sampled them correctly. I think the media orchestrated these polls in a way to skew them to get the results. I don't see how you go from being the most unpopular vice president in history, right? I don't think we've ever had a vice president who was less popular than Kamala Harris. And all of a sudden, she's the greatest thing since sliced bread, and everybody's excited and energized about this campaign of nothing but air. And so I didn't believe it. The economy is lousy. The voters know it. And so I don't see how anybody votes for 4 more years of what we just had. I mean, it's been pretty bad. And in fact, all around the world, people are voting to throw the bums out. And Harris is one of the bums that people want to throw out. I think Trump should have a better chance of beating Harris than he had of beating Hillary Clinton, and he beat her.
We'll get into and explore what a Trump presidency means and how it would differ. But let's go along with this Harris scenario right now, because I don't disagree with what you're saying. We have had guests on the show that, quite frankly, question the integrity of the electoral system and the vote counting process, and in the first place. But that's a whole other conversation. But let's assume we do get a Harris win. And you're saying we're going to get these entitlement programs. We're going to see further inflation. We're going to see lack of faith in the US dollar. What would lead it to lose its reserve currency status in one administration? And then the question is always, what's the alternative, right?
Well, yeah.
The dirty laundry basket, my favorite line to use in the scenario, is that alternative there? What replaces the dollar if, according to this op-ed, it happens in one administration?
Yeah, well, first of all, you don't have to look for another dirty shirt in that hamper. That's what everybody misses. Gold is not in the hamper. Gold is not a dirty shirt. It's the cleanest shirt we got. And that's what would replace the dollar. Because before the dollar was the reserve currency, gold was the reserve. That's what all the central banks, including the United States, held as the reserve. And when we convinced the world to leave the gold standard for the dollar standard, it was with the understanding that we would stay on the gold standard. And not only would the dollar be backed by gold, I mean, the dollar was gold. It was defined as a weight of gold. But not only could those paper notes, Federal Reserve notes, not only would they be backed by gold, but they would be redeemable on demand in gold. So even though Roosevelt made it illegal for U.S. citizens to convert their Federal Reserve notes to gold, foreign governments could always take their Federal Reserve notes and get gold at a fixed rate of $35 an ounce. And so when we broke our pledge in 1971, when we defaulted on our promise and we told the world that the notes are now worthless, that they used to be IOUs for gold and now they're IOUs for nothing, the dollar got marked down, but it didn't get counted out. It lost about 2/3 of its value against the Deutschmark, the yen, the franc, but it stayed as the reserve currency. And that was the beginning of the huge problem, because once we realized that the world was dumb enough to hold our worthless paper as a reserve, that's what started the massive deficits. That's how we went from the world's biggest creditor to the world's biggest debtor. That's how we went from large trade surpluses to massive trade deficits, because we could print money and get stuff for free. And so when the dollar starts to collapse and central banks want to divest and everybody wants to get rid of dollars, they're not going to say, okay, well, let's try the euro on for size. Why would they want to do that? Why should the euro be the reserve? The yen? Are you going to use the yen? I mean, come on. They can't. I mean, the yen isn't. They're not. They can't use the pound sterling anymore. You know, you're right. There are no currencies that are worthy of the dollar's crown. The dollar's not worthy of it either. So what the world is going to do is go right back to gold. That is the obvious choice that everybody is ignoring. Talk about like the elephant in the living room. So people are complacent. Oh, the dollar will be the world's reserve forever because no other currency can. Paper currency needs to be backed by real money. That's the problem. We have a monetary system right now without any money. We need to anchor the system with real money. The paper is a money substitute. It only has value if there's real money backing it up. And gold is the best real money that we've discovered. And that's where we're headed. So the question is, when does the world go back to the gold standard? Not does it, but when? But the history of the world for hundreds of years is gold is money. And that history hasn't been rewritten. Gold's going to continue to be money for a long time. This period where it wasn't used as money will be a footnote in history and a lesson to be learned. So this has created this false sense of complacency that the dollar will remain the reserve currency indefinitely because there's no other currency that can take its place. But people are missing the elephant in the living room. The obvious choice to replace the dollar is what the dollar replaced, and that's gold. And so that is where we are headed. We are going to return to the gold standard. That is the norm throughout modern history, was to have gold as money. I mean, that's the problem with our current monetary system, is that we don't have any money anymore. We just have paper. But currency needs to be backed up by real money, and that is where we're headed. So it's not a question of will or even if we're going to return to a gold standard. The question is when. You know, how soon is it going to happen? The sooner the better, as far as I'm concerned. But I think we're a lot closer now than we've been in the past. And I think that circumstances are certainly evolving in a way that makes not only that return inevitable, but close at hand.
All right, well, Peter, to your point, central banks have been buying gold at record levels the past few years. We continued to see a strong buying trend in July, even with gold prices this high at all-time highs, according to the World Gold Council. But you're saying ultimately we're at the era of the end of paper currency, that the fiat currency era is over. So in your scenario here, do countries go back to backing their own currencies with gold? Are they using their currencies to trade, knowing that their currencies are backed by gold? Are they using gold directly? Or does some new common currency backed by gold, perhaps a basket of commodities, come into play here?
Well, you know, if certain countries want to back their currency with gold and then other countries want to hold those gold-backed currencies as reserves, I suppose they could do that. But, you know, based on history, that it didn't work out that well when people put their trust in the United States. So I think it makes a lot more sense for central banks to own their own gold reserves and have those reserves to, you know, back up their currencies. And I think that is the move that, or the direction that the world is going to be headed. So instead of holding on to U.S. dollars, which they then loan back to the U.S. in treasuries, central banks, foreign governments will hold a gold reserve. You know, whether they make their currency officially exchangeable into gold at a particular rate, we'll see. I mean, that would be an improvement. But to the extent that they continue with paper money, the primary backing for that is going to be gold instead of U.S. dollars. And so for the rest of the world, it's not a big change because they still had to earn those dollars, right? The only country that can print dollars is the United States. So if you're a foreign country and you're accumulating dollars, you might as well just accumulate gold because you still have to earn it. You still have to generate exports and have, flows coming in to buy that gold. Or, of course, some countries, they can mine it themselves, right? And then the governments can buy it right off the miners. But the big change is with the United States. Because when we are back on a gold standard, or when the rest of the world is no longer on the dollar standard, then we don't get a free ride anymore.
Right.
We need to earn gold to back our currency, and we need to export to import. Because right now, countries export over $1 trillion a year of goods to America to get dollars, right? As you know, to back up their currencies, or but they're not going to need those dollars anymore. They're going to need gold, and we don't have that. I mean, we do. I don't know that we're going to sell off the gold that we have, but what's going to happen is we're not going to be running those trade deficits anymore because the world's not going to need our dollars. They're going to need gold, and so they're going to. But so for the rest of the world, it's not as big a change, but it will rein in governments. To the extent that they want to keep running deficits, it's going to be a lot harder to do that with gold than with the U.S. dollar.
Right.
And I think interest rates globally are going to be a lot higher than they have been, and and that's also going to be a big change.
So I get your point, but in your scenario, what is used as the medium of exchange? Is it currencies, local currencies being used globally, but just backed by gold?
Yeah, I mean, people could still use dollars, euros, yen, pounds. They just would have gold backing instead of dollar backing. Although the U.S. dollar has really no backing, right? Although we have whatever gold we have in Fort Knox. But it would be better and more honest if there was a fixed exchange rate where you knew you could convert your currency to gold at a particular price. That would keep governments honest. But if we don't do that, if governments just need to hold gold as a reserve in case they have to defend their currency, how do they do that? They would sell gold and buy their currency. That's what central banks do with their dollars. They hold those in reserve in case they need them. But I think the world trade, right? There's a lot of the world trade that is also denominated in dollars. That's got nothing to do with governments, where you have individuals in two countries trading with each other, where they're invoicing and paying in U.S. dollars. And I think that's going to change. And, it would be a lot easier if everybody invoiced each other with gold. And, gold is very easy to pay. We talked earlier about, a Bitcoin, but the blockchain, might be used to make gold payments among, companies, individuals, a lot easier to facilitate. We don't even need a central bank. You could have private depositories, and gold can change hands, either on a blockchain or just through online transfers. And so it's not that hard. And especially, internationally, you could price things in gold. You wouldn't even have to price things in currencies. I think that could be the direction that the free market heads, as more people lose confidence in ever-inflating fiat currencies, and they want to do business in gold because it's more stable and more reliable. They could do that. And we have the technology today to make that a lot more efficient than it's been in the past. But the current monetary system cannot last, right? With the dollar at the centerpiece, because it is the source of all these global economic imbalances. You have a country like the United States that consumes way beyond what it produces. And these huge chronic deficits are a major problem for the structure of the global economy. Right. And the longer it persists, the bigger that problem grows.
So, Peter, you potentially see a gold-backed token on the blockchain, which then facilitates easier transactions. How does the Brics plan fit into here? Because the Brics, they reportedly have a plan to come up with some common currency backed by gold, potentially a basket of commodities on the blockchain. This has been hypothetically something that they, theoretically something that's been in the works for the Brics for a while now, and they're getting closer to fruition if we're led to believe the reports. The Brics also expanding, adding Iran, United Arab Emirates, Ethiopia, and Egypt. Turkey now wants to join. There's a big meeting happening in Russia in October. Allegedly, reportedly, they're looking at doing some gold-backed digital token common currency. What are your thoughts there?
Yeah, look, obviously they're trying to figure out a graceful exit from the dollar system, and they're toying around with different ideas, and who knows what they're going to end up doing. But again, I don't think it makes any sense to use a whole basket of commodities. You're overly complicating what should be a very simple thing. Gold's the only commodity you need. You don't need to throw oil and wheat or soybeans or copper and create some kind of basket of all these commodities and try to peg your currency to some commodity basket. I mean, it doesn't make any sense. I mean, it's better than what we got now, which is pegging it to nothing. But it's so simple to use gold. That's why we used gold in the past. I mean, it just works so beautifully. So I think that's where they're going to go, whether they decide to have one common currency that's backed by gold or how they decide to set it up. I mean, ideally, governments wouldn't even be involved in money. That's a little bit too much to hope for. I would rather have private, free market determine money and use whatever money the market wants. But obviously, the government, collects taxes, and so they have to collect it in something, and they have to have payment in something. But in the United States, the way it worked originally was only gold and silver could be legal tender in the United States because the states were prohibited from making anything but gold and silver legal tender. The federal government wasn't given the power to make anything legal tender. So the only thing that could be legal tender was gold and silver. And so that's what taxes were based on. The U.S. government was given the power only to coin money and regulate the value of the coins, or fix the coins. But the only thing that it made sense to coin really was gold and silver, because that's all that was legal tender. Now, it did coin copper and nickel. It made pennies and nickels just to make commerce easier. But you couldn't legally pay your bills. I mean, you couldn't pay your bills. They couldn't demand payment in pennies. I mean, you could pay in pennies, but that wasn't the legal tender. The legal tender were dimes, quarters, dollars, because they were made of silver. And so, but it worked. It worked beautifully up until the Federal Reserve in 1913, where people paid their taxes in gold and silver. I mean, that's what they did when you paid dollars, because the definition of a dollar was a measure of a weight of either gold or silver. Right. And at that time, $20 was 1 ounce of gold. That's basically what it meant. I mean, a dollar or $20 was basically an ounce of gold. That's what you had if you had $20. But the founding fathers never gave the U.S. government the ability to print money, and that's why they don't. That's why the Federal Reserve creates the money. But they had power to coin it, and coining it is not printing it. It's taking money, which can only be gold and silver, and turning it into a coin. It's not. They used to call printing money bills of credit, and the states were prohibited from issuing bills of credit, and the federal government was not authorized to issue bills of credit. And the federal government only has the powers that the Constitution authorizes it to have, and one power that it was never given was to print money or create paper money.
But nonetheless, we got to where we are after Bretton Woods and after Nixon took the U.S. off the gold standard, and then the U.S. became the global reserve currency, and the privilege that is, which many have said they've exorbitantly abused that privilege. And it's very nice when you're able to print your own money and the rest of the world has to pay you back their debts. Which brings me to a question which I've asked you before, Peter, is, would the U.S. be willing to give this up without some very, very strong fight? I wouldn't. The ability to print your own money and have the whole world be forced in a way to use that is not something you're going to give up too easily.
No, it has been a huge advantage, but it's also, created a huge problem, because we've abused that privilege to the degree that we've undermined our own economy. I mean, we're the whole U.S. economy is now built around that privilege. And if we lose it, everything that was built on top of it is going to collapse. I mean, we're no longer self-sufficient as a result of the ability to depend on the rest of the world. I mean, I've been saying for a long time, we're basically living off the charity of the rest of the world because they produce things that require real resources, labor, capital, materials, and they give it to us, and we just create money out of thin air and give that to them. So we get real value. They get pieces of paper that really have no value, but they have a market value because people want them now, but they won't want them ultimately because we've issued too many. We can't repay the debt with any real purchasing power. And so it's going to come to an end. And the question is, well, we're not going to give it up without a fight. I mean, how are we going to fight? I don't know. I mean, I don't know that we can threaten other countries with like a war, like, you're going to hold dollars or else, like we're going to drop a bomb on you if you don't buy more dollars. I don't know that we'd be able to do something like that. But if we want to keep the dollar as the reserve currency, it's going to be a huge sacrifice in order to return some kind of fiscal sanity to give our creditors confidence. And I don't even know, are we beyond the point of no return at this level? Is it even too late to do the right thing? I mean, maybe it's not, but there's no indication that we're going to. I just can't see any politician doing anything to accelerate a crisis, because the only way we can preserve the dollar is to have the crisis. We got to have it now on our terms rather than later on the market's terms. And nobody wants to do that. Every political instinct that a politician has is to kick the can. Why have a crisis today that you can postpone till tomorrow when it's somebody else's problem? I mean, you may not be in office tomorrow, but you're in office right now. And, voters have a tendency to shoot the messenger. So nobody wants to deliver that message. And so I just can't see us preemptively doing anything to postpone this crisis. So it's just going to happen. We're going to have a currency crisis, a sovereign debt crisis. And in that crisis, right, there goes the dollar's reserve status. Now the question is, how does the U.S. survive after that? How do we make the adjustment back to an ordinary country where we have to live within our means, where we can only consume if we produce? Right? We can't have this ridiculous service economy with $1 trillion a year trade deficits. That's just not going to be viable anymore in a world where the dollar is no longer the reserve currency.
Right. And, as we've discussed before, every global reserve currency has had a lifespan. I always like to say that there was a time when the Portuguese escudo was the global reserve currency of the world, when Portugal
was backed by gold. It was backed by gold.
Even then, that was backed by gold. But nonetheless, you mentioned, of course, a lot of this has to do with perception. I want to bring it to the near term and the political angle, because we start off by saying that if VP Harris, according to you, wins the election, gold goes to $10,000. And then the dollar's path to losing its status as the global reserve currency is vastly accelerated under just one Harris administration. The problems, though, are granted accelerated then, but are systemic at this point. So what happens under a Trump win to gold and to the dollar?
Well, the dollar is still going to go down under Trump, because Trump, unless, he surprises me, but the deficits are going to continue. They're going to cut taxes, and they're not going to cut spending. And so spending is going to increase. Interest on the debt is going to increase. And so there's going to be a lot more inflation. The Fed's going to be back at quantitative easing in Trump's term. I mean, it's just, they're not going to do some of the crazy stuff that the Harris team is talking about, whether they'd actually do it or not. But inflation is going to get worse under Trump. The deficits are going to get bigger under Trump. And so the dollar is going to go down. Whether it goes down for the count, whether the dollar's reserve status can survive the Trump term, we'll see. It's like, again, its days are numbered. It's hard to know exactly how many. I'm already surprised that it's survived as long as it has, and the debt has grown as large as it has.
So either way,
nothing that can't go on forever will go on forever, and so this is going to come to an end.
But either way, you see the Fed giving up its inflation fight, sacrificing the dollar under Harris or under Trump. It's just one administration makes it worse and goes faster.
Look what they did after the 2008 financial crisis. Look what they did after, COVID. That's their playbook, and I just don't see them, working with another.
Now, Peter, what would you say to your critics that say, Peter Schiff, Dr. Doom, he's been calling this for years, since the 2008 financial crisis, and yet the can gets kicked down the road further and further. That road hasn't come to an end. Oh, Peter Schiff's been calling for this doomsday scenario for years, and yet what is inevitable is not necessarily imminent. The road just gets further down. The can just gets kicked further and further down the road, and the road never seems to end. What do you say to your critics on that one?
Yeah, well, first of all, I was predicting it before the 2008 financial crisis. You got to go back even further than that. Remember, I predicted the 2008 financial crisis. That's one of the things I got right. But you are correct. I have been warning about the inevitable collapse of this system for better than 20 years, and the system survives, right? The problems underlying it are much worse now than they were when I was warning about them 20 years ago. That's for sure. But yes, it has gone on for a lot longer than I would have imagined back then. But that doesn't mean that my warnings were wrong. It just means that it's taking longer for the inevitable collapse to happen. But the longer it takes, the worse it's going to get. So it's not a good thing that we've succeeded in postponing the inevitable, because we've made the inevitable so much worse because of all the additional problems that have been added as we were, postponing the consequences. So it's going to happen. And yeah, you can dismiss what I'm saying and think, we got another 20 years. Schiff could be, wrong for 20 more years. Maybe the national debt can go to 100 trillion. I don't know. Who knows where it would be, right? If it could continue for another 20 years, maybe 200 trillion. I don't know. But at some point, it's like the proverbial straw that breaks the camel's back. A lot of straws have been piled on the camel, and so far it's still standing. But that doesn't mean it can take an unlimited weight. It just takes that one more. And so look, during the 20 years that I've been warning about this, the price of gold has gone up more than 8-fold. So it's not like we haven't seen any consequence. Gold has beaten the Dow, even if you took the dividends of the Dow. And I think the move is just getting started. And we've had all these crises over those 20 years. It almost fell apart in 2008. I could have been right, if we didn't have a big bailout and kick the can down the road back then. And we had all those QE programs that allowed us to get to where we are now, but at great cost. As I said, we made a deal with the devil, and the devil hasn't come back to collect yet, but he's coming. And it's going to be a big price to pay for what we did. But, I'm still telling people to prepare for it. It's going to happen. It is inevitable. There's an investment strategy that you can make. You could have a portfolio of non-U.S. assets, of value, dividend-paying stocks. That portfolio is actually doing quite well now. It's this recent move. We've seen a big rotation out of momentum and growth type stocks to defensive value, dividend-paying stocks. I think the big move in commodities is coming, a much bigger move up in gold. I think gold stocks are, the sleeper investment. Nobody is buying these things. They're as cheap as they've been. The major U.S. stocks are trading at a big discount. You look at the Newmonts and the Barrick Golds, they're at a significant discount to the S&P 500 as far as multiples, and that's historically an aberration. Normally, the gold stocks trade at a premium to the S&P. So it's rare that they're at a discount. They're at a substantial discount. But I think the big thing with gold stocks is going to be just a parabolic move up in gold that's going to, increase profits dramatically, and not just increase profits, but increase the value of their reserves.
Right.
Because there's a lot of gold reserves that are being valued at zero because it's very expensive to get the gold out of the ground. But it's going to be a whole different ballgame when the gold price is a lot higher. And now gold that has no value becomes extremely valuable. And now all of a sudden investors have to price that in to the gold mining stocks. So, I think my investment advice, though it's taken longer than I thought, the payoff is going to be bigger than I thought for the people who had the patience to stick out the trade.
Yep. Slowly, then suddenly, it all sort of unravels, as many of our guests would say. And many of our guests have pointed out the opportunity with the disconnect between the gold price and the gold miners. Peter, last time you were on, you correctly called gold hitting a new all-time high. You said that if gold meaningfully breaks above 2,100, that you were comfortable calling that as a new bottom. Gold was around 2,000 at the time. You said if it comfortably breaks above 2,000, hits 2,100, you were comfortable calling a new bottom for gold. Well, where are you now? Do you have a bottom you're comfortable at?
Oh, yeah. I don't think gold is going to trade back below 2,000 again. I think those days are gone. I think the new support is probably just below 2,500. Is it possible that gold can go below 2,400? I suppose that's possible. That could happen. Maybe 2,350. I wouldn't wait for that. And I've been telling, our customers at SchiffGold not to wait for a bigger break in gold. I just think you buy gold here. I think, 2,500 is, the new 2,000. And I don't think 2,500 is gonna stay here for long. I think we're going to be at 3,000 before we know it. Maybe, we could get there before the end of the year. We can start to see some bigger moves. But even if we don't close the year at 3,000, I think we'll be closer to 3,000 than 2,500 by the end of 2024. But 2025, price can go much higher than that. I was calling for $5,000 gold back in 2010, 2009, and we didn't get there. We got to 1,900. But now, I think 5,000 is low. My target is much higher now because we've printed so much money since then. There's been so much more inflation that's been created that gold is a lot more valuable in terms of these inflated dollars than it was, back then. But I think we're going to start moving quickly at some point in the price of gold. Especially when you start to see investors buying. They haven't bought into this rally. I've been talking about this is the most unloved gold bull market. You can buy gold at an all-time record high, and you're a contrarian because nobody believes in it. Nobody cares. Nobody covers it. The public isn't buying it. The hedge funds aren't there. The pensions, the endowments, nobody is buying. It's at an all-time high. So it's going to have to go much, much higher to get on anybody's radar, and then even higher to get the naysayers to capitulate, throw in the towel, and start to buy. Maybe the last ones will be the hardcore Bitcoiners who finally try to buy whatever gold they can afford with what's left of their Bitcoin. But eventually, you're just going to have a lot of people coming into the gold market. It's not just going to be some astute central bankers in the BRIC countries that are buying the gold, and me and my followers. There's just a small number of us that have been buying. We mentioned last time. We met at the New Orleans Investment Conference. Hopefully, I'll see you there this November. But that's like the oldest gold conference in the country, biggest conference. We get like 500 people that show up at that conference. They just had the Bitcoin conference in Nashville. Maybe you were at that one. There were over 20,000 people there. So that's where the excitement is, right? That people are ignoring, what's gold, but you don't want to enter a crowded trade, right? You want to be in the market that everybody isn't overly enthusiastic about. Normally the gold stocks lead the metal because investors are so confident that they want to buy the gold stocks. Now the metal is dragging the gold stocks reluctantly. And every time, look, yesterday, gold was down 0.5%, and gold stocks are down 4 or 5%. They just got clobbered on 0.5% move. Today, gold pretty much regained the entire 0.5% it lost yesterday, and the gold stocks were down again. That's how scared. The minute gold got below 2,500, that's it. It's going to crash. Get out, sell. Right? Talk about climbing a wall of worry. This is the steepest, biggest mother of all walls of worry. that I've seen in a bull market. So this is like really, really early. That nobody believes in it. Even the hardcore. I got clients of mine that are thrown in the towel. Like I can't hold these stocks anymore. I got to get out of them. They've been in these gold stocks. So even some of the hardcore true believers are having a hard time staying the course. But it's going to be a big payday. I mean, it's when people really can't take it anymore and they're like, I'm done with these stocks. The next thing you know, they're just going to take off. And, so I don't want to have to chase them. I'd rather own them, before there's a rush to buy.
So lots of room left in the gold price rally, as well as the gold miners. Peter, as always, wonderful chatting with you. We don't agree on everything, but we do agree on gold. Final thoughts as we wrap up here.
Just, if you want to take advantage of the gold mining stocks, I manage a fund, the Euro Pacific Gold Fund. EPIGX is the symbol. That's the no load version. It's the investors class. People can buy it at any discount broker that you may have an account. They'll be on the platform and you could buy. I think, as long as you can take the risk. Remember, gold mining is a risky business. It's probably the riskiest business you could be in as far as all the things that could go wrong with a gold mine. Very different than physical gold, which I regard as about the most conservative place that you can put your money. But given the big move that I see coming in gold, there's going to be an even bigger move, I think, in these mining stocks. So I would encourage people who want to speculate that that's where you got the best odds. That's where you have the most upside potential relative to your downside risk. I mean, there's a lot of downside, but the upside dwarfs it. And so the risk reward is there. But if you just want to protect your wealth and have a safe store of value, then you could buy some physical gold. And also prepare, we have portfolios at Euro Pacific Asset Management. We're putting people in these, dividend paying foreign stocks, stocks that I think will survive and thrive in an era of global inflation, stagflation. What worked in the last couple of decades, just buying the indexes, buying the tech stocks, buying the Magnificent Seven, that's not going to work. Right? That kind of stuff, that's what worked in the 1960s. People made a lot of money with the Nifty 50, with Polaroid and Xerox and all these new stocks. And if you stayed with that trade too long, throughout the 70s, you got obliterated. The 70s destroyed a lot of portfolios, a lot of retirements. But the people that, could read the writing on the wall in the early 70s, late 60s, that loaded up on commodities, oil, gold, silver, that bought stocks in Japan, right, instead of the U.S. If you did that, if you bought emerging markets, you made a killing in the 1970s. And so I think that the same setup is here now, only bigger. The stakes are higher too if you get the trade wrong. So I would reach out to our advisors at Euro Pacific Asset Management, and don't forget, follow me. I got over 1 million followers now on X, so I'm posting constantly there. Also, you mentioned Schiff Sovereign. That's my newest venture. We have a daily free newsletter at SchiffSovereign.com. You should sign up. We also have a premium letter, which is not that much money, but it's got a lot of additional value. And my own podcast, people should be listening when I put them out, the Peter Schiff Show on SchiffRadio.com or on my YouTube channel. And I've started to do, and I got to do more of these spaces things on X. So if you follow me, you'll get an alert the next time I do one.
All right. Well, a lot of content, a lot of insight, a lot of analysis. Peter, we really appreciate you taking the time and sharing that with the Kitco viewers. Thank you so much, Peter Schiff.
Thank you.
Thanks again, Peter Schiff. Thanks to our viewers for watching, and a big thanks to our new sponsor, Goldback. For our viewers not yet familiar with Goldbacks, this is an easily portable form of gold. Goldbacks are physical, interchangeable gold currency made of real 24-karat gold. Now, these are gold notes with real gold woven inside. The gold is vacuum deposited using state-of-the-art proprietary technology. And with Goldbacks, you can help protect your wealth against fiat currency debasement and devaluation. through the stability of gold because they're made with real 24-karat gold and they appreciate with the price of gold. And Goldbacks also allow you to own and spend gold in small interchangeable increments, and you can buy Goldbacks for as little as $5. Goldbacks can actually be used as real money from small to large transactions. There are over 5 states where Goldbacks can be used to pay for goods and services from a growing list of 2,000 businesses. Goldbacks are accepted as payment for goods from coffee to sneakers to RVs to services like chartering flights, getting your car repaired, and accounting services. And there's also a way to earn interest on the Goldbacks that you own paid in Goldbacks, and you can get all the details on goldback.com. So if you want to diversify your gold holdings and get some Goldbacks, there's a link in the description of this video with where and how you can buy your Goldbacks. So make sure to check that out. As usual, thank you for checking us out. Please feel free to comment, praise, whine, or just opine. We love hearing from you. For me, Michelle Makori, and the rest of the Kitco team, we'll see you again soon.
On the Spot with Michelle Makori is brought to you by Goldback Inflation-resistant 24-karat gold currency. Protect your purchasing power, grow your wealth annually, and spend at over 2,000 businesses. Learn where to get Goldbacks at goldback.com.